Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. This particular edition, I'm starting at Twitter. The reason I'm starting at Twitter is because someone mentioned Tommy Lee, and in fact, I talked about this last week's video, just throwing out the Tommy Lee from Motley Fool, and lo and behold, 2 hours ago from when I started recording this video, here is a tweet from Bar Chart mentioning Tom Lee of Fundstrat. Since 1928, the most common month for the summer low is August, and the most common week is the first week of August, according to Fundstrats Tom Lee. There you go. I won't forget that now, that not only is Tommy Lee Motley Crue, he wasn't a singer, was he? He was a guitarist or something, also married to Pamela Anderson. He's also a Fundstrat manager or something. Anyway, the other thing I also noticed is I went up and saw this particular tweet from Matt Allen, and this guy's really good. I'm not even trying to pronounce his name, but I have watched a few of his YouTube videos. He's really good. So if you want more, or you want to be more knowledgeable when it comes to valuing stocks, I really recommend Aswath Damodaran. And then, funny enough, I went below this bar chart tweet, and there was a few interesting tweets here from JP Morgan. Retail traders have bought the dip to the tune of $1.8 billion, with $1.3 billion of that going to four names: Tesla, Nvidia, Microsoft, and Palantir. There you go. And then there was another, not this ad from Optosport, this one from Massimo. If you think overpopulation is a problem, I don't. In fact, I have the complete opposite thought about this. You may be wrong. I would say you are wrong. 2 centuries of rapid global population growth are coming to an end. That's an absolute truth. World population growth is a first derivative in math terms and peaked in 1968, going down almost continually ever since. UN projections show it possibly falling below 0.1% in 2100. This is an absolute truth. The biggest problem we're going to have in the future, if we don't really get into automation, that sort of thing, is we won't have enough people for all the jobs. That can and may be a problem already. And one of the reasons why the unemployment rates aren't increasing, because even though people or companies are firing people, there's just not many people out there to fill all the jobs that are increasing, that are out there, that sort of thing. And we had a fairly significant growth in jobs in Australia. And again, we're still seeing companies saying they're finding hard to hire people. There's not enough people out there. And that's another reason why the government decided to increase the immigration rates. But I think there's another reason behind that as well, more nefarious reasons, which I won't get into in this video. Okay, so let's go back to your comments. And we'll start off with, in fact, I'll just increase the font size. I'm not going blind or anything, but we'll start off with Daniel 4155 at a loss with Droneshield at the moment. We'll be waiting for it to slowly rise. What I'll do with Droneshield is I'll talk about Droneshield in my technical update video tomorrow, August the 18th, because I'm just going to have a look at the chart very quickly now and put it into that watch list. And I think it's better to be in that video than this video. So let's move on to the next one. So thank you, Daniel. Method 341 and stock under the hood, talking about SciDev, SDV, Method 341. A bit regretful that I didn't buy SciDev last week. The volume is just too thin though. Maybe it will start picking up now. That's really interesting because I've been a shareholder of SciDev for many, many years, and the volume might be thin. Yeah, it probably is thin. But because I'm a long-term shareholder of that company and hope to be a long-term shareholder, volume is not a concern for me. Now, you might see an increase in volatility, but when you do have a long-term horizon, volatility does not matter, or even the volume does not matter. So I think it all depends on your time horizon when it comes to volume and that sort of thing. And stocks under the hood, good video as always. Doubled my position inside over the open today. They're looking the goods. PNR, worth a closer look, unhedged and ramping up. So I'm assuming that's Pantoro. So what we'll do is I'll have a look at SciDev and also Pantoro. This was 3 weeks ago, like 24th of July. And I'm pretty sure SciDev share price has gone up since then. Chart is looking pretty good for SciDev. So this is another company or another chart that maybe belongs in the technical update video. So 24th of July. It was on that beer. They released their Appendix 4C, whatever. Share price rallied 18.52%. Pulled back on that little bit of a dip we saw a few weeks ago. And I'd love to see the share price get above 50 cents again. But chart is starting to look good. Beautiful turnover, or beautiful, not turnover, a beautiful transition from a slightly negative sentiment, or maybe highly negative sentiment, and a downtrend in the share price. Now positive sentiment, and the trend is up. And just looking at volume, by the way, subtle increase in volume. Again, very subtly see it. And it is, I'll just try to get rid of that. So if you get rid of that big spike in volume we saw back in April, we have seen a nice little increase in volume the last month or so. It's very subtle, but it's there. Okay, so that's SciDev, and I am a fan of this company a long term, what they do, and also their potential, what they do, and also the fact that the company's financials are looking pretty good right now. Pantoro, this is definitely a company on my watch list. Again, it's a mining company. I'm not the biggest fan of mining companies. If I had to choose a big mining company and a smaller mining company, I'll probably levitate towards a smaller mining company that has a little bit more potential for growth in the future. However, for the bigger mining companies, I'm more interested in valuation and the timing of the mining cycle. So for instance, right now, I am a little bit more intrigued when it comes to BHP, Fortescue, and Rio Tinto, because it seems like they have been bitten by the little bit of a dip in iron ore, even Phoenix, and might as well just show you those charts right now because I'm talking about them. So Fortescue share price has dropped a lot, now down to $17. It hasn't quite halved. Even BHP is getting down to interesting levels, down below 40 now. Actually, right on 40. So it did dip below 40 on Thursday. No rally in iron ore, so this is just a bit of oversoldness. And we have just seen the share price rally a little bit on one day, but this is not the end of the downtrend for BHP. But again, what is also interesting for me is iron ore hasn't fallen significantly. It is below $100. So what happens if iron ore falls to $70 or even $60, which is a possibility? I don't know. It would be interesting to see where the share prices of these companies go. So I am more interested in these type of companies when we're at the different stages, particularly at the bottom of the mining cycle. I wouldn't say we're at the bottom of the mining cycle right now, but there is a bit of weakness in iron ore. So I'm more interested in these companies because of where the valuation and the share price is. But if a company like Pantoro, with potential to increase their production over a few years, even though I don't know this company well, and not only that, the chart looks okay. The chart has sort of broken out. So Pantoro does have a market cap of 632.5 billion. I also had a look at their, they would have released Appendix 5B. I'm pretty sure they would have released Appendix 5B. And if I remember correctly, this was a pretty good one. I like this one. So just had to give ComSec a bit of time to open this up. If I did this via market index, would have opened up in a split second. I did Wardle the other day, and first go, green, 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 and the last letter not a green. So a massive amount of emotions within that split second of the first word you do in Wardle. Usually it's not much, but first time I've ever had 4 green letters, and then the last letter I missed out by 1. I think it was, what word was it store or something like that? I forget which word it was. Anyhow, Pantoro. Where is Pantoro? Here it is. So this is the last quarter, the $25.5 million of operating cash flow. Now they did spend a bit of money on capital expenditure, not a lot, and also non-current assets, mine capital development. But the company was free cash flow positive. And they also did a capital raising, pretty big capital raising. So at the end of the quarter, the company had almost $100 million of cash. The other thing going for Pantoro is the chart. Share price did get above 10 cents, has been above 10 cents, now below it. I would not be surprised to see the share price get above 10 cents, stay above 10 cents soonish with this company. I actually was following this company many years ago. How long ago? Would have been back, actually, it could have been back in 2017. Went a bit of a run. And then if you do have a look at the longer term chart, not that exciting, but it's more closer towards the bottom of historical prices then towards the top. And this could be the start of a pretty significant long-term uptrend for Pantoro. The other probably thing is, back in 2016-17, this company probably would have had way less shares on issue because they've probably done a few couple raisings since then. You can always see that. If you go to FinChat, put in Pantoro, and like if you just have a look at the market cap of this company we'll go last 10 years. So right now the market cap is the highest, even though share price is towards the lowest. So back in 2017, when the share price was significantly higher, the company had a market cap of below 200 million. And the whole reason behind that is shares on issue. And if you go to the income statement in FinChat, they should have shares on issue. We'll just go to total shares outstanding, and you can see a massive explosion in shares on issue over the past 7 years. In fact, it's gone up almost eightfold. Yeah, almost eightfold since 2017. And that's the problem with these type of companies. They need to raise capital. And the whole point of equity markets or capital markets is to raise capital, easier to raise capital. That's why companies list on the ASX and other exchanges, to raise capital. It's one of the reasons, I should say. So that's Pantoro. Thank you. Stocks under the hood. Nice name. Nice name. Method 341 has a pretty, I wouldn't say outlandish, a pretty, well, yeah, I was going to say interesting, but that doesn't quite do it either. He states that FBR, the fast robotics building company that builds bricks, could be the next Droneshield. Seriously, he says, it can be the next Droneshield. So that's not outlandish. I definitely can see the potential with fast bricks or FBR, but it has to realize that potential. In fact, I probably could say and argue that if FBR completely realizes the potential, they could be significantly bigger than a Droneshield, because bricklaying is pretty significant around the world. So total addressable market, I would assume, is bigger for FBR than Droneshield. Now let's have a look at the chart for FBR. There is a bit of excitement in this company. They sent a machine now over to, was it Howden or something, over to Florida. And that is the weekly chart, but let's have a look at the daily chart. The share price has pulled back a fair bit, but that could be the buy the dip situation. I don't know. Market cap of this company is fairly high at 177 million. The other thing I always look at is volume. Really nice volume coming in since the start of July, after the share price just went sideways for a long period of time. Then the volume started to increase. This was a beautiful breakout. Beautiful breakout for FBR. Potential, yeah. I think this is sort of, FBR is a sort of company where it comes back to your conviction. So obviously, Method has higher conviction than, say, me. I have probably lower conviction. He thinks it can be the next Droneshield. I think maybe, yes, maybe. I can see that argument. There will be some people out there who says, no, there's no chance, zero chance. I need proof. They would have lower conviction, and they would not even think about buying this company until they prove that potential. While someone like Method says, I think this potential could be realized, and now is a good time to be in this company. So it all comes back to your conviction. It also comes back to why you bought. If you're just trading it, maybe. Yeah. I wouldn't be surprised to see quite a few traders in FBR right now. Lachlan Arrington, Mesoblast back for the third time, Kneppy. Fingers crossed. I have been trading Mesoblast for many, many years, sometimes successfully, sometimes unsuccessfully. And let's have a look at Mesoblast. Haven't seen or looked at this chart for a while. When I say haven't looked at it, I mean in depth. I will glance at it quite frequently, but not in depth. Even when my in-depth looks are not that in depth. First thing that is noticeable, the highs before that massive drop back, well, 1 year ago, share price got to about $1.32, and it was trading Mesoblast in June, July last year. And this was a fortunate get out. So the share price just before that big drop went down quite quickly over a short period of time. That was a get out signal, and I did sell out a few days before that massive drop. So this was some good timing. Sometimes you can show that timing works, sometimes not. So now, why I'm mentioning that is the share price did get up to about $1.30 back before that big dip, and the share price recently got back up to those $1.30 levels, or very close. So obviously, that right there is a resistance zone. Share price needs to, oh, and then again, not only that, it got there again. So that level between about $1.28, $1.32 is a really important resistance level for Mesoblast. And at this point in time, well below that, fell below $1. I did mention many years ago that Mesoblast, $1 was an important level. It always remained above $1. One of the reasons why I was trading Mesoblast was because it hit $1 and then rallied. And yeah, if you go all the way back, if you actually have a look at the weekly chart, yeah, $1 for many years here between 2015 and 2021 was an important level. And then it broke through that level in 2022. So this was actually after I was trading it. And then I was trading it in here when I went on a little run. So I was trading it mainly between about 2019 and 2021. If you have a look at the long-term chart, yeah, so there was a lot of interest in this company back in 2011. And this is another company where the shares on issue are much higher right now than they were back then. So the market cap of this company is probably, I'd say it's probably lower now. But again, I'm just going to have a look at the shares on issue because this company hasn't produced much cash flow. Well, they definitely have not produced cash flow. Even revenue has been fairly low. So if you have a look at the shares on issue, you're going to see a massive increase. Yeah. Well, it's gone from not as bad as Pantoro, but shares on issue have tripled in the past 10 years. Okay, so that's Mesoblast. And in fact, I haven't looked at the short term. Let's have a look at the short term chart for Mesoblast. Yeah, I think there's a bit of interest has come out of Mesoblast right now. Volume has decreased, that sort of thing. So day traders, yeah, they're probably not in this anymore. I probably would not be trading Mesoblast right now. Thank you, Lachlan Arrington. JGW3786 says ATX, smiley face. ATX, Amplia Therapeutics. I might have mentioned this company once or twice. And yeah, once or twice. And based off this chart and the volume, yes, I probably mentioned this company once or twice. Share price broke out on the 25th of July. And let's see what happened on the 25th of July. Here it is, sustained reduction in tumor size seen in pancreatic trial. That does trigger a memory. So definitely, probably, and then additional patient response in pancreatic cancer trial. So I think I'd definitely mention this company at least once, maybe even twice. So we all hope that this company is successful, particularly because they're dealing with pancreatic cancer. So the chart does look interesting. A couple of really good days in there, 25th of July, up, what was it? 61%, and then it was up again 50% on the 6th of August. And the share price has remained strong. So not much selling apart from the day after that first announcement. There was a little bit of selling on that day, but not a lot. And the last, say, 2 weeks, the interest in this company has remained and some good volume coming in as well. Interesting, Amplia Therapeutics. Again, this is a story stock. And I am trying to refrain from getting too excited about story stocks because a story like Amplia Therapeutics, even though I don't know it that well, the story could be 1,000 pages long and maybe we're just in the first chapter. I don't know. Maybe Amplia Therapeutics is midway through their story, or maybe they're towards the end. Depending on how you define the story. So for me, a story stock, they finish the story when they become a real business. They're selling something profitable, that sort of thing. That's when the story ends and they become a business. Maybe there's a next book to be written. So I don't know where Amplia Therapeutics are in their story. They could be at the beginning. They could be at the middle. Probably not towards the end. For instance, Neuron Pharmaceuticals. I started following them probably 2011. That was at the start of the story. It took them 10 years to finish that story. 10 years. Even now, they're still probably in the second book, and that story has a lot to go before I would consider Neuron to be a highly successful business, even a high-quality business. All right, so thank you. Just a nice, sweet comment. Landed the money. Xero are still unprofitable. Are they? I thought that turned the corner into profitability. Let's have a look. Let's have a look. When do they release their results? 23rd of May. Let's have a look at the annual report. In fact, I'm going to have a look at the annual report via Market Index, because I've opened up that particular announcement in ComSec. It will take 5 years to open. So let's go to Market Index. Here it is. I could have a look at FinChat, but I just want to see the numbers for myself. What did I do then? Did I open the right thing? What am I doing? What am I doing? I must have pressed the wrong. Here we go. So we'll open up the PDF. Yeah, you can see it opened straight away. If I did that in ComSec, it'll take, I shouldn't say literally because I'm using the wrong definition of the word. It would figuratively take 5 years to open up. Oh yeah. Here we are, the financial statements, revenue. Okay, this is for the year. This is a year, financial year 24, and it says here they're profitable. In fact, they're highly profitable. Profit after tax of 174.6 million. Last year they were unprofitable, but Xero is profitable. I thought they were. In fact, earnings per share of $1.15, and there was no one-offs here to. No one-offs. In fact, there was asset impairments and disposals. There was a reversal of asset impairment, but no one-offs here. So straight away, they're profitable. So I think sometimes, and you hear this with Howard Coleman on Ausbiz The Core, he's from Team Invest. He will say a company is unprofitable, but he sometimes can be really slow to the party. Really, really slow. He's a laggard. So he probably would say Xero is unprofitable. He's not up to date. I'm pretty certain of that. He's very rarely up to date on his numbers, and he probably would say Xero is unprofitable, that sort of thing. But they are profitable based off their last report. So I'm going to have to disagree with you, Land of the Money. Xero is profitable. I won't actually comment right now. Thorley Photography. Tissue repair would need to be compared to other companies that might have a competing product. Polynovo, Aurora Biosurgery, and then there is a burn treatment when it was first used for the Bali bombing. Burn treatment, Bali bombing. That is ringing a bell. And then I'm pretty sure there was an ASX company who did that. What is that company? Fiona Wood's spray on skin. What company is doing that? There is a company doing that. Tell me the company. Resell. What was that? What was resell? Resell burn treatment. Maybe it's one of those companies we were talking about. Avita Medical. That's it. Avita Medical. Yeah. So we have Avita Medical, Polynovo, Aurora Biosurgery. There seems to be a lot of companies within that space. I remember doing a research on this a few years ago, and for a few decades, there was no advancements in this area. And now all of a sudden, all these companies are piling into this particular area. Anyway, he's mentioning which is still struggling now, Avita, yeah. I actually did release an OK report the other day. Beware the story, some guy once said. A lot of these companies have a really high valuation, but if they do make it, you could see these companies being a pretty big company in the future. Tissue repair, I don't know this company all too well. I'm going to have to be honest with you, but I'm pretty sure the share price went off on a bit of a tangent recently. They did do a presentation. I'm going to open up their Appendix 4C because I just want to see if they have any cash flow. And again, this is probably more of a story stock than anything else. And yeah, $67,000 of cash receipts for the last quarter. So straight away, I'd put this in the story stock bin. And it's probably one of the reasons why I really haven't looked at this company at all. It's still a story. Anyway, so let's have a look at the chart for tissue repair. That's the last thing. And in the chart for a story stock, I'm not going to be swayed by a chart. I am becoming a little bit more risk averse when it comes to story stocks. And really good day. Yeah, really good day on the 25th of July, 95.45%. Share price tipped back, and it's taken off again. But the volume has really slowed, has really decreased from that initial burst. Did I put this on any of my watch list? Yeah, high volume spec, which makes sense. A story stock here for tissue repair. And Thorley Photography made some very good comments there. Beware the story. Not all stories. Some stories make it. They go from a second book. There's a what do you call it? A sequel. T23 Med. Any thoughts on TG6, AZL, NEU, and DXP? So we have Neuren Pharmaceuticals, Dimerix, TG6, and AZL. TG6. I'm assuming this is a mining exploring company. TG Metals. I have no opinion. High grade lithium, so it's lithium. I have no opinion of this company. Zero opinion. They are a mining exploring company. And I'm just seeing if they're just in lithium or if they have other stuff here. So, of course, when these companies, yeah, it looks like they're just in lithium. The first thing I do with these companies, I have a look at the cash receipts. No cash receipts, is a story stock. It's mining exploring company. Could do anything. And even for these companies, I very rarely look at the chart. So let's have a look at the chart for TG Metals, and the chart tells me nothing. So I have zero interest in TG Metals right now. So there must be a reason you have an interest in this company. Could be management, that sort of thing. For me, no. There was a massive amount of interest in this company back in October, November last year. You can see on October 30, share price of this company ran up 252.4%. Share price kept on going up all the way up to $1.25. Now it's 15 cents. So this is what can happen to story stocks. So I put this in my story stock basket, and they have to prove themselves to me. The other company is AZL. Don't know this one at all. Arizona Lithium. Again, lithium. So what's going to drive, and I'm assuming this is also an exploring company. I'll just have a look at the chart again, and I'm assuming the chart doesn't look good. Arizona Lithium, and assuming their projects are in Arizona, I would work for this company. So my favorite place in the world is Western United States, apart away from the cities. I hate cities. So Los Angeles is my least favorite city in the world. There's some interesting things there, but I love the mountains and just how diverse it is in Western United States. You can go from massive mountains, snow, to the hottest part or place in the world. And even Death Valley is amazing in itself. And I love Arizona, Utah, all the way from Western Canada, all the way down to, I'd say, yeah, Arizona, Mexico, New Mexico. Anyway. So yeah, if someone from Arizona Lithium wants me to work for them, I'd work for them. Not sure what I would do. Anyway, the chart looks terrible. Chart looks terrible. And it all comes back to lithium. What's your opinion on lithium? The other thing is, just because you have an opinion, thought on lithium, and how it's going to do over the next few years, doesn't mean you're going to be right. You could be definitely wrong. That's the most important thing, understanding you could be wrong. So I have no opinion on either of these two companies. Now, when it comes to Neuren and Dimerix, I do have a little bit of a high opinion on these companies. Now, Neuren Pharmaceuticals, I have been a shareholder of this company for about 3-4 years. So I bought, I'd followed this company for 10 years, and I bought on this day, the 7th of December 2021, so almost 3 years ago. That day, the share price ran up 91.2%, and I thought this was the day when the company went from being a story stock to finishing their story, finishing the end, and transitioning to their sequel. And that sequel was a company that really didn't have to do any capital raisings because they were going to produce a lot of cash. They had a deal with, what's it called? I forget the company they did the deal with. But that was the moment. That was the inflection point for the company. Bought some shares at maybe $3. I forget how much. Share price is now $15.57. A little bit of weakness in the share price. Some weaker than expected sales of their debut drug, which is being sold by whatever it's called. I forget that company. That's why the share price and the chart looks a little bit weaker. But I don't really follow the chart for Neuron Pharmaceuticals. The only reason I might follow the chart is if I want to take a trading position in the company. So a lot of potential for Neuron Pharmaceuticals. Yeah, just a lot of potential moving forward. Demerix is probably on a rung lower. I'd say Demerix is towards the end of their first book. I wouldn't necessarily say they sort of do remind me of Neuron Pharmaceuticals a little, because this company does have deals, Demerix, but the deals aren't quite as good. Why? What's happening in my throat? Deals aren't quite as good, so they're towards the end of their book. Maybe not the last chapter. I'd say definitely in the final third of the book. And this company has had a bit of a troubled last 3 years, because a few years ago, they did or released results. This would have been in late 2020, 14th September 2020. I still remember this date because the share price did fall a fair bit. Even though I wasn't following this company all that closely, the share price went on a massive run, and the share price pulled back a fair bit. And it was something to do with like the results of their drug, whatever, compared to placebo. There was no significant difference. But the story has moved on. So this was a pretty bad chapter for Demerix, but the story kept on being written. And since late October, or early October, the story has got a little bit more exciting. That's why the share price has risen. More people are interested in this company. A bit of volatility in there, but they're not quite towards the end just yet. I need a little more proof when it comes to Demerix, but definitely, in my opinion, just my opinion, they're probably way further along in their story than those other two lithium exploring companies. I have no idea when it comes to those two companies. This company does have a deal, and if they keep progressing, they will get a fair bit of money, but not as much as Neuron, if I remember correctly. Anyway, so two companies, yeah, not much thoughts on, and two companies I do like. Zamasu, a couple of new contracts for Alcidion is very welcome news. Really hoping they're cash flow positive in their Appendix 4C on 30th of July. We're going to see that. In fact, I'm pretty sure they were. In fact, I have been fairly negative on Alcidion. My negativity is changing slightly. And it's really good to see that even the people out there, the investing community, I am seeing a bit of a shift in sentiment. So my sentiment is shifting alongside the investing community. Someone said I should not be mean to Alcidion. So I'm being actually quite nice to Alcidion right now. So let's have a look at their Appendix 4C. And I'm pretty sure this was a pretty good one. I'm pretty sure I went, this is a pretty good one. But if I remember correctly, this company does have, their results are seasonal. So I think this is the quarter they had to be cash flow positive, because if they weren't, that would have been a concern. So $5.6 million in operating cash flow. For assessing customers, $18.6 million. So I think they needed to be operating cash flow and free cash flow positive this quarter, because if they weren't, that would have been a massive red flag. Now let's have a look at the chart for Alcidion. No, that's the wrong one. That's Australian Clinical Labs. I actually do get those two companies' ticker codes mixed up. Alcidion and Australian Clinical Labs. One is ACL, the other one is ALC. I don't know what. So if we have a look at the chart, so I think that one of the reasons why my sentiment is shifting is probably because of the chart. I have not been, just looking at the chart, I have not been positive on this company since probably late 2021, when the share price was in the 30 cents range. There's been nothing since then that would get gotten me excited until now. And this happened a few weeks ago. So when they did release their results, was that the 24th of July? Oh no, there was another announcement on the 24th of July. And that was sort of the start of the shift in sentiment in this company. And now the share price is above the longer term moving average channel. That's a positive sign. The shorter term moving average channel is starting to turn green. We've got the green shading, and we haven't seen as much selling. And we've also seen the volume starting to increase a little bit, sort of subtly increase as well. So chart for Alcidion is looking better than it has for the past 7 years. So a little bit more positive around this company right now. Alcidion, Zamasu, Vagu. AGY is up from Human King. AGY. Some of these companies Argosy Minerals. I'm assuming this is another mining exploring company. Let's see what this company does. So yeah, in fact, they're not burning much cash. So even they're exploring, they're not spending a lot of money. Bit of development. So $70,000 on exploration and valuation, $463,000 on development. So are they developing something? Looks like another lithium company. There's just so many lithium companies on the ASX. It's ridiculous. That little boom in lithium was horrendous for the ASX because every second company listing was a lithium exploring company. There's just a plethora, my favorite word, of lithium exploring companies on the ASX. Talking about lithium carbonate, regulatory approval granted for development, production, operation expansion of Rincon lithium project. Significant de-risk from project development. I suppose, so we're talking about stories. I've been talking about stories this whole video. So it seems there is a possibility that Argosy is more towards the end of the story than maybe some of those other exploring companies. So again, why do you like this company? What is your thesis? And if lithium prices remain suppressed, then there's a possibility that this company could never make it. But if lithium prices start increasing, this could be an interesting company. Looks like they have projects in Argentina. Rincon is 77.5% joint venture interest, earning up to 90%. So let's have a look at the chart for Argosy. Now, if this chart looks better than most of the lithium companies, that is telling me there's some strength to this company. So let's have a look at Argosy. And no. Well, that was no. In fact, share price took a massive dive. 24th and 25th, just fell off a chart. What happened then? Rincon Lithium Project update. Okay. So straight away, my opinion is no. So you said Argosy is up, and was that the 26th of July? It rallied 41.2% on that day. But then the next 2 days after that, it fell 8.3% and 6.8%. In fact, you can just see, fair bit of volatility around that date. So I say no for Argosy at this point in time. Jason Nimmo, I believe copper will bounce off the Fib 618 for the one last explosive run. Look, Fibonacci's are all over nature. People talk about petals and Fibonacci's just everywhere. Like Fibonacci nature. For some reason, I can just think of petals. So seed heads, pine cones, fruits and vegetables display spiral patterns that, when counted, express Fibonacci numbers. And I'm pretty sure petals have something like petals are like Fibonacci numbers or sequences, whatever you want to call them. I'm just going to see that petals. Many flowers have a number of petals that match Fibonacci numbers. For instance, the lily often has 3 petals, the buttercup 5, the chicory 8, the delphinium 13, and the daisy 21. Yeah, so Fibonacci is everywhere, but I have never looked at Fibonacci when it comes to investing. So he's saying, of the 618 Fibonacci, the one last explosive run. And the way I look at it, I just have no idea. So let's have a look at copper. There's less bearishness out there because of some good retail numbers in the United States. Even in Australia, there's some good unemployment numbers. But I would expected copper to probably bounce a little bit harder than it has in the last week and a half. But it definitely has bounced a little bit. But if I had a look at this and I was just say this as an individual company, I would be a little bit bearish and this would be a bounce. And I would be a little bit wary of this small bounce. Anyway, so again, Dr. Copper, this tells me that the market is a little bit wary out there when it comes to economies. But if we start to see the copper move in a really nice uptrend, that would be a sign that we're a little bit more bullish and we're not as concerned. Thank you, Jason Nimmo. Method 341, Kneppy, Electro Optics looks like a solid buy. I bought in this week. So I do own shares in Electro Optics. I had been trading it for a while. I'm not trading it right now. In fact, I sold my trading position, not my long-term holding position, way back in March. $1.70, and the share price is $1.75. So you could have said, "Oh, I shouldn't have sold then," but the share price fell all the way down to $1.25, and it's bounced up. So a lot of volatility in Electro Optics right now, which makes sense. This company's receipts, revenue is going to be quite lumpy, and you're going to see this company in some quarters, even some halves, be highly unprofitable. Some quarters, halves, highly profitable. And I think you're going to see a share price rally and drop a fair bit. So a lot of volatility, which means there's going to be a lot of day traders in this, maybe even medium-term traders. So a few weeks ago, chart did look pretty good. So when Method broke that, the share price was trying to get back up to $2. Then we saw that bit of weakness in the overall market. And Electro Optics on the 5th of August, which was our big day, down day, did drop 12% on that day and is now back up to where it was before that drop. There you go. So there's some people who sold it on that day and are probably regretting it. Or maybe not, who knows. How do I look at this chart? This chart, yeah, it's all over the place. I think maybe I'll get a different opinion if you look at the weekly chart. So to be honest, the share price, go back to the daily, share price, because of this really solid run up just before they did the capital raising, the share price did get above $2. I was loving the chart back then. Then they did the capital raising, and the capital raising destroyed the positive sentiment and the trend in the share price. I need to see a share price get back above $2 for me to be a little bit more bullish when it comes to Electro Optics share price as a trading position. And of course, we're all different. We're all different. As you see, Method 341, things are solid buy, and he bought some shares. We're all different. Sam Bell D1, thanks for your commentary on Stealth Group. Thank you. You're welcome. My only concern about Stealth Group is the chart. But I still think this company is cheap, particularly when you have a look at their ambitions. And if they can prove their goals, then this company is dirt cheap. Yeah, the chart just looks, I don't know why there's been selling. I don't know why anyone's selling this recently, because the market cap is like $20 million. The company's profitable. It's growing. Yeah, I don't know. I think it could be just negative. I don't know. It's one of those unknowns that I don't know. Ryan Mott says, I'm an absolute legend. We're all legends in our own way. Anderson said, good question too. Thank you, Anderson. Nice says, excellent update. You're welcome. I'm looking for the next question here. Malcolm Jennings says, it was hot in the 1930s, cold in the 1970s, now warming. Although if you disregard global warming, we should be in a cooling trend right now. I'm not going to talk about anything else when it comes to climate. The only thing I would say is I think there's a lot of unknowns, even a lot of things that climatologists don't know. And one of the reasons I think we had a fairly wet summer is because of sea surface temperatures around Australia. And I don't think we take that into as much account as we should. I think sea surface temperatures are really important. Higher sea surface temperatures leads to more moisture in the atmosphere. More moisture leads to more rainfall. So that's all I'm going to say. And I do think there are a lot of unknowns and a lot of factors, a lot of potential climate drivers we just don't know about. And some of those climate drivers could change. But thank you, Malcolm Jennings. Travel Freebird. I started watching your videos recently. I realized that you're basically giving updates on how the markets perform and how to read up companies, their plans, reports, and cash flow. I know you're not asking anybody to follow your advices. No, I can't. I'm not even giving advices. I can't give that. It is illegal for me to give financial advice. Now, if I was talking about Bitcoin or property, or everything's off table there, I could tell you buy some property in this suburb of Brisbane because it's going to go off. I can say that. So there's much less regulations in those areas, and there are reasons behind it. There's nefarious reasons, in my opinion. But it's really interesting that I cannot give advice when it comes to like the stock market, shares, or companies. But when it comes to property, yeah, who cares? When it comes to cryptocurrency, yeah, I'll tell you to buy Dogecoin or one of those crappy cryptocurrencies, and no one will care. Anyway. But if it's all right with you, may I ask how to best interpret your videos? For example, this is a very long question. For example, yesterday, 26th of July, the biggest takeaway I got was Bellevue's report, shares dropped a lot, and most likely something to look at for the long term. Would you say the best way to interpret stocks when to buy in is when downtrending companies hit an inflection point evidence of positive cash flow. Also, for that matter, today's video talked a little on climate change. What do you think on Ampol stocks? They recently announced plans for EV charging stations in Australia. I did not know that. That would be interesting. I've been thinking about that lately. Why aren't petrol stations doing more of that? Thank you very much for reading. You're welcome at Travel Free Bird. How to interpret my videos? That's up to you. I have no idea. I am just sharing ideas. That's the thing I do. So I do invest different ways. Now, this Bellevue's report, 26th of April or July. Bellevue, BGL. When did they do their capital raising? When was that? 26th of July? No, yeah, okay. It was a capital raising. The whole reason the share price dropped was a capital raising, 26th of July. So they did a fairly big capital raising. It wasn't really on their report, or maybe had to do with their report as well, but did they release the report at the same time? They released their, yeah, it was just a capital raising. So that's why the share price dropped, was because of the capital raising. Yeah, so not their report. It was just the capital raising. And they did the capital raising at a discount. Share price, a lot of times when a company does a pretty big discount, even a smaller discount, the share price will drop. That's natural, very natural. So what we say the best way to interpret stocks, when to buy in, I believe it all depends on what or how you consider the quality of that company. So for instance, I've been talking about story stocks a lot in this video. Story stocks are not high quality stocks. So in my opinion, it all comes back to first thing, what is your, or why would you be buying shares in the company? For instance, for story stocks, do you have high conviction about their technology or their management? And that means you're in it for maybe the longer term. Or if you're just trading it, then the whole reason you might buy in is completely different. So if you're trading it, it could be just on the back of momentum, the trend, positive sentiment in the company has shifted, that sort of thing. So it all comes back to why. And that's also leads on to having a plan is very important. Why have you bought in? When will you sell? That sort of thing. So for instance, if I like a high quality company and I see the share price drop, the fundamental, the technicals matter much less. It all comes back to valuation. So for instance, what's a good company? Let's talk about Pro Medicus, has a P ratio of something like 200. If I saw the share price of this company drop to say $5, share price now is, what's the share price of Pro Medicus now? Something ridiculous, $200? $150, so a little bit off there. You can just see how I'm a sharer of this company for a long time. I was way off when it comes to the share price. It just seems like the share price is gone. If I saw the share price of Pro Medicus fall to $15, I'd put probably all my money into it. It's not going to do that, of course. It's not going to do that. So, and if it did fall from $150 to $15, maybe if we get a significant depression, that could happen. The trend in the share price would look awful. The chart would look awful, but valuation. So for high quality companies, valuation to me matters. So then the next question is, how do you determine the quality of a company? So that's a very good question. I think you have to ask for yourself. For me, it comes back to metrics like growth, revenue growth, earnings per share growth, dividend growth. If they have dividends, don't necessarily need to have dividends. Valuation metrics is not as important, but it is important. So P ratio, in the history of P ratio compared to normal. So if the P ratio of Pro Medicus fell to 12 and historically it's above 40, that means it could be cheap. There could be a reason behind that. Another thing is what I will refer to as quality metrics, and that is return on equity. Let's go back to Pro Medicus, into FinChat. And in fact, in FinChat, all these are listed on the front page. So we have growth. So I'm a big proponent of growth. I love revenue per share growth, particularly. I want to see the company growing, but also I like to have a look at the historical PE ratios. I don't look at dividends all that much, but also the things I like to see is on the left-hand side, we have return on assets, return on total or tangible assets, return on equity, return on capital employed, return on invested capital. I like to see those pretty high. I focus on return on equity return on invested capital, that's just me. And for Pro Medicus, those two are above 45%. That's high. That's a sign that this company is high quality. Another sign a company is high quality is just the chart, by the way. So if I see a company is high, if I think a company is high quality, valuation becomes the determining factor when I might not buy a company. So valuation is important. If I don't think a company is value, if I don't think company is high quality, I will use different reasons for maybe buying a company. And typically it's technical reasons, but not always. So just recently, actually this is a lie. So just recently I bought some Horizon. So if you just looked at the chart, or you'd say, oh, why did you buy that? So there it is, buy at 330. So share price dropped a lot on their release of the results, but I actually saw some value, and also the share price had moved into a support zone, which is this purple box. So I thought support zone, a bit of value, I could see the share price go on a bit of a run. But a lot of time, and this is not a high quality company by my definition. So let's have a look at Horizon. So you're going to see much lower growth, if much growth at all. In fact, over the last 10 years, revenue has grown at 0.1%. Earnings per share growth has dropped over the last 5 and 3 years. Dividend growth has dropped over the last 3 years. And if you have a look at the return on equity, 11.9, return on invested capital, 6. In fact, some companies, you see those metrics well below 5. And this is 5-year average, by the way. The other thing I looked at is, nothing I look at is gross margins, that sort of thing. But I won't mention that right now. Things I look at when it comes to valuation include P/E ratio, historical levels, but also price to free cash flow, also free cash flow yield, which they don't have here. But you can sort of determine that by looking at their price to free cash flow. I like to see those numbers at historical levels, good levels. So Horizon is not a high quality company, in my opinion, by my rules. But I will buy if I see some value and I have a technical signal, which I had with Horizon. Other non-high quality companies that I do trade right now would include, what's a good company? What about MyState? So MyState is sort of like a bank. You might consider this company a bank. I'm not bullish on banks, but I did like the chart here. And the valuation is not that high. And I've read this a few times now, that even when it comes to technical analysis and trading, valuation even matters. So if you have two companies with the same sort of technical signal, same sort of chart, one had a P ratio of 10, the other one had a P ratio of 60, you're more likely to see the company with a P ratio of 10 outperform the market. So even when it comes to technical analysis, valuation matters. So I'm actually using that as well when I'm coming to decisions on whether to take a trading position. So when it comes to low quality companies, I'm more likely to use technical analysis. But when it comes to high quality companies, more likely to look at valuation. So hoping that's answered your questions. The other thing you mentioned here, evidence of positive cash flow, inflection point. So this is really important. I do look for that. In fact, there's been a lot of this negative sentiment around small cap companies over the past 3 or 4 years. That's bogus, because if you focus on small cap companies that are growing, that are profitable, that have hit that inflection point, they've done really well over the last 3 to 4 years, in really, really well. So it all depends what you look for. Story stocks have done horribly over the last 3 or 4 years. So it all depends what sort of companies you're looking for. So I like to look, particularly when it comes to small cap companies that are growing, that have just become profitable, free cash flow positive, operating cash flow positive, even when they announce their first dividend, can be a really good inflection or even a catalyst for that company. Okay, so hopefully I've answered a lot of your questions. What do you think on Ampol's stocks? They recently announced plans for EV charging stations. I had a look at Ampol's chart. Yeah, was it today or this morning? Ampol. What's that ticker code? I forget. ADL or something? ALD. Chart looks pretty bad. So I wouldn't consider Ampol to be a high quality company at all. And you can see that by the chart. It's just done nothing over the last 10 years. Share price has gone sideways over the last 10 years. Not a high quality company. Anyway, share price has moved into a downtrend. No interest at this point in time with Ampol. It is interesting if they're doing this rolling out of EV charging stations in Australia. That's something that is needed without doubt. Thank you, Travel Bird. Mook and Daisuke liked my climate change rant. I'm not gonna rant anymore about climate change at all. That's it. User something says, thanks Kneppy, can you share the McAvoy all-in-one script? And then Alistair McAvoy says he will share that eventually. Hey, nice again, says great video, you're welcome. T Bandera, who asked me a lot of interesting questions. Hi buddy, what is your view on Nasdaq? Bullish, S&P 500 bullish, and ASX 200 for the rest of 2024. Okay. I don't like to give any sort of forecast for a short period of time because I just don't know what's going to happen in the next few weeks, next few months. Will the recent plummet and struggle cease and market recovery become imminent? How do you also see the Nikkei 225 progress for the rest of 2024? So again, I don't like to give any forecast for a very short period of time because when you talk about short periods of time, the movement in anything is going to be a lot of times noise driven. A little bit of weakness, a little bit of negative reports, we could see the markets drop 10%, and that could be it. Or if maybe positive reports come out, we could see the market go on a short-term tear. I just don't know. So typically, my sentiment when it comes to short-term is neutral, always neutral. So I'm going to be neutral on all these for the rest of 2024 because I don't have that ability to see the future that could drive these markets in that short of a time. No idea. And if I gave a prediction, I'd say there's a 50% chance I'll be wrong. Because, again, I just don't know. But longer term, markets, anything is driven less by noise and driven more by, well, history and also by financial performance, if I was talking about a coveting. Now, NASDAQ, S&P 500, ASX 200, Nikkei 225 will all be higher in the future. And when I say future, I'm saying 5-10 years down the road. That's an absolute given. I'd say that's 99.5% sure that all these indices will be higher in 5 years' time. Unless the only thing that could go wrong is if we go through a really prolonged recession like the 1930s. Is that going to happen? I think not. Probably not. Okay, user. Lots of users with maybe these are people who haven't signed up. I have no idea how you get a username like user. Buddy, where would you invest $200,000 tomorrow? Thank you for your help. And then Travel Free Bird says, I'm not a financial advisor. Absolutely correct. Can't legally tell anyone what to do or what to buy to sell. Can't do it. He can give advice on what to look for based on numbers and your preferences. Then can come into play. Do you privatize dividends or growth stocks? How long do you plan to hold stock, etc.? You can start the video at 31:48 for simplicity. Best of luck. All right. Yeah, what Travel Free Bird is absolutely right. And in fact, that's what a financial advisor should do. They should ask you questions. There's many questions they should ask you. So everyone is different. So I can't give any advice to you because I have no idea. I have no idea about you, your circumstances. You could be 20 years old. You could be 75 years old. And in fact, if I was giving advice and I could give advice, my answer to you would be completely different. Are you risk averse or do you like taking a risk? My answer to you would be completely different if I could give you advice. Dividends, do you like dividends or do you prefer growth? So a lot of questions to ask, even if you did go to a financial advisor. And then even if you did go to a financial advisor, sometimes it's up to luck about the quality of that financial advisor. I think there would be some really amazing financial advisors out there and probably some dodgy ones. Now, user did then ask a question about XRF. And I am a shareholder of XRF. I just cannot see it in the videos. Thank you. Okay, so I am a shareholder of XRF. I've been a shareholder of this company for a while, and I just hope to continue holding this company for a while yet. I like it. That's all I'm going to say. Chart looks really good. In fact, if you take a look at the weekly chart, Yeah, the weekly chart looks amazing, doesn't it? So this company broke out back in 2019. I don't think I was following it back then, but this is the charts of a high quality company. I wouldn't quite specify XRF Scientific as high quality just yet. Still a fairly small company, 192 market cap. Revenue's been growing. In fact, let's go back to FinChat. And I'll just show you why I would consider this company to be, I wouldn't say it's high quality just yet. It needs, I think, a little bit more time to prove to me. So let's have a look. So P ratio is 22.95. That could be high or low, but valuation for this company doesn't matter to me just yet because I'm an owner. But if I wasn't an owner, I'd probably looking at the P ratio. Is this company cheaper? Or could it get cheaper? That sort of thing. A revenue growth, beautiful revenue growth. So what I'm looking for there is 10% at all these different timeframes. It's there. In fact, over the last 5 years, revenue has grown at 16%, earnings per share at 38.97%, which shows me there's been a bit of margin expansion. Dividends growing, that's not a consideration for me. Dividend yield of 2.36%. That's not a driving force for me whether to own or not own shares like this. I want growth. I want revenue growth. I want earnings per share growth. But dividend growth is just sort of a nice little topping on the dessert. Return on equity at 12.4%, return on invested capital 11.4%. I would prefer those to be a little bit higher, but that is fine for me because this company is growing at a nice rate. So yeah, I have no complaints about XRF. It's not, in my opinion, high quality, but it could be high quality in the future, particularly if the company can continue to see some margin expansion and also if the company can increase their return equity and return invested capital. So if you go to some of these ratios, where would it be? Is it in capital efficiency? Yeah, there it is. So return equity has been growing. This is exactly what you want to see. You want to see increases in return equity. That's a good sign. In fact, according to this, return equity of XRF right now is approaching 20. And return on invested capital is probably the same. So a lot of things to like about this company. And I decided many years ago just to buy some shares in this company because I thought it was high quality or has the potential to become high quality. And it's small cap. And I love small caps that have the potential to be high quality. So this is one of those small cap companies that has done really well against the XSO, the small cap index. Hopefully I've answered a lot of your questions. I do like XRF. I am a shareholder. I am biased. And one of the reasons I do this channel is to share ideas, but you have to understand that sometimes I will share, a lot of times I will share companies that I am a little bit biased. Either way, like I hate the banks. I think their CBA's P ratio is getting up to 25. That's dumb. It's ridiculous. And the reason that's ridiculous is because your potential returns are much lower if the P ratio of CBA is 25. Do you think there's going to be any multiple expansion? Very little multiple expansion moving forward for CBA. So they need to have to prove their valuation by financial expansion. Their profits went down the last year, and more than likely, you're not going to see much growth in their profits over the next 5 years. More than likely, I think it's either going to be flat or down. A lot of competition, that sort of thing in that space. Stu Percy says, you would love listening to the British band The Smiths. Yeah, well, I would consider myself to be a bit of a audio, well, maybe not, that's a little bit extreme. I know the Smiths, I know them well, yeah. Some of my favorite songs are Smiths songs. When Morrissey went solo, I think Morrissey is very hit and miss, his individual work. But the Smiths, yeah, they're one band I do like. I wouldn't say I'm the biggest fan of the Smiths, but I do like quite a few of their stuff. Some of my favorite songs are the Smiths. My favorite song for the Smiths would be There Is a Light That Never Goes Out. Stu Percy also says, thank you for sharing. Love the video. You're welcome. Nathaniel Gray. Onconsil now above 1 cent. Closed today at 1.1 cents. Thoughts on buying since it's now over 1 cent. Again, this is Onconsil, OSL. Oh, it's just stayed above 1 cent. Oh, let's have a look at the daily chart. That's a weekly chart. I think this comes back again to your personal preference. I don't know a lot about this company, Onconsil Medical. I do prefer these sort of health biotech companies over mining exploring companies for a few reasons. I think that comes back to personal preference, and because I've had more success with those biotech companies like Neuron and a few others as well. The other thing I do like about this chart is the volume. We have seen the volume really expand in 2024, particularly from about April, May, when the share price was at the bottom, 0.4 cents. Now it's at 1.2 cents. So this comes back to your personal preference. I need to know a little bit more. Let's have a look. So one of the things I do with these sort of companies is I will have a look at significant growth in commercial treatment sales in Q4 financial year 24. Actually sounds pretty good, doesn't it? So there is a reason behind the increase in interest in this company. That could be one of the reasons. If you have a look at the most recent appendix 4C, pretty low receipts, so not a lot of revenue. So it is in this company. It's not like a mining exploring company or one of those biotech companies in phase 2 trials. This company is actually selling something. They've got receipts, but it's very low receipts and they're still burning through a lot of cash. So one of the things I would probably focus on when it comes to this company, again, conviction. I would say that Nathaniel Gray has a higher conviction that I would have. He's probably done a lot more research than I have on Onconsil. So maybe he even knows the management. He's talked to management. Maybe he knows the technology, that sort of thing. So this comes back to your conviction. And I think one of the sayings is you can't sell or buy conviction. Pretty sure that is a saying. You can't sell conviction or buy conviction. You can't sell conviction. Something like that. I forget. There is a saying where you can't sell or buy conviction. Something like that. Or transfer conviction. I forget. You can't. No, you can't. I forget. There is a saying to do with conviction that everyone's going to have different conviction levels when it comes to the company. So I don't want to ever try to persuade you or dissuade you against or for buying a company, because we're all going to have different conviction levels. And if I'm really highly convicted about a company, and if I somehow convince someone to buy a company and they have much lower conviction, what do you think is going to happen if the share price falls? I would say, well, I think this company is going to succeed. This is a little bit of noise, but you could be saying, oh, you bastard, why do you recommend this company? You asshole, that sort of thing. So anyway, so I do have a rule: don't buy companies when a share price is below 1 cent. Share price of Onconsil is now 1.2 cents. So that has one thing going for it, a nice increase in volume, another thing going for it. And I probably this is me personally, I'd just like to see a bit of proof about their business. I need to see receipts growing, and that little announcement there, significant growth in commercial treatment sales in Q4. They put a number here. Yeah, they do have a number, increased by 78%. There you go. Now, DavidRace, it is easy to get in your feelings over stocks. I feel your pain. I don't get pain when it comes to any feelings over. I try to keep my emotions out of it. Now, I am biased when it comes to some companies, but even then, I do try to keep my bias and my emotions out of any decision, because your emotions can really affect your decision making. That's what I'm going to say about that. DavidRace also mentions, I know you're not a fan of banks, but Heartland Bank, up over 10% of late, and Jeff Greenslade, one-time manager, purchased 340,000 shares in April. Any interest for you an option? Now, even though I am not a fan of banks, I actually do own a MyState. Well, I am trading MyState. The chart looks good. I have tried to trade Bank of Queensland recently, but the share price is going sideways. I have traded ANZ back in the future. Pretty sure Westpac in the future, or not the future. I have traded ANZ back in the past. Pretty sure Westpac in the past as well. So I will trade the banks, but I would never own banks for the long term. So I don't consider banks to be high quality companies. And Highland Group, I don't know much about this company. Oh, share price has gone a little bit of tear since the 19th of July. Share price has increased from 88 cents to $1. Market cap of this company is 836. Why do I not know? Dividend yield is nice. P ratio 9.6. So if you look at MyState, which I do own, and again, valuation matters. The P ratio of MyState is like 13, and dividend yield. possibly, without me knowing anything about Heartland Group, just by looking at the valuation, has dividend yield of 9% and a P ratio of 9.6. If you have a look at the nice growth in dividends last year, not dividends, revenue, stable profit that has slowly been increasing. Share price is long-term lows, are very highly illiquid back between 2019 and 2022. Liquidity has increased, share price in a downtrend. I don't know anything about this company, but I'm just going to open up, see if they've released any announcements recently. They're releasing their results on the 29th of August. So still 2 weeks from when I'm recording this video. And has this company changed its name, or has it always been Heartland Group? Formerly Heartland New Zealand. Oh, is this New Zealand? Okay, New Zealand. All right, no, that's all I'm going to talk about when it comes to Heartland, but this is very important. So one of the reasons I do this channel is to share ideas with you. But one of the things I found, without even realizing it was going to happen, is that you also share, the viewers, you share ideas with me. And this has happened quite frequently lately, that you have raised a company. I've never had a look at the company and went, ooh, this is really interesting. And I actually have bought a few companies on the back of you sharing ideas with me. Maybe this is another example of that, maybe not. But Heartland Group, I have never had a look at this company, but the little things I've looked at, interesting. So thank you, DavidRace. Ruben says there could be rumors that Bell will not punish SGR and instead giving the green light to renew the casino license. Okay. I am really interested in Star. To the point where I have taken a small position. When I say small position, I mean small, like $1,000, which is small. And what I'm going to do is I bought on this little rise in share price. So I went, well, this is the first signal. And then when I get the second signal, I buy some more shares in the company. Unfortunately, that was just before that little dip in the market. So I have no intentions of selling that. And I just think, this is me thinking a little bit ahead, that eventually this company will release some good news, a little bit of good news, and the share price will just take off. We have seen the share price go sideways for about 10 months. And I think the end of the downtrend is coming, or has already come. You could actually argue that. I think the low has already been reached. And I am just projecting that eventually the share price will move into an uptrend. And this is an example of me seeing value in this company. And when the market starts to realize value again, realizes there's still value in this company, I could see the share price of this company triple from here. Possibly. So again, I don't want to, you should not go out there and buy some shares in this company just because I'm saying that, but this company does look interesting. So for that, I did buy some shares in the company, and sort of like initial position, because there is that saying, maybe not a saying, there is that thought that even owning a small amount of shares in a company, you become more invested. Well, that's an absolute truth, because just by owning shares in a company, you are more invested, but you tend to follow that company a bit more closely. Anyway, that's Star Entertainment Group. Matthew says Telstra is a dog. Why is that? Why are dogs considered bad things when it comes to investments? Dogs are awesome. Maybe you should call them something else. I'm trying to think of a really bad animal, but mosquitoes. Everyone hates mosquitoes. So instead of a dog stock, let's call them mosquito stocks. Ugh, yuck. Dog stocks are awesome. Well, dogs are awesome, so dog stocks should be awesome as well. We should have bear stocks as well. They're awesome as well. Telstra. Telstra is a case of a company that is not high quality. Some people think it's high quality because it's a moat. A moat alone is not a reason why a company can be high quality. And Telstra is a perfect example of that. Look at the history of this company. Telstra. I saw someone just yesterday gave a buy recommendation because this company will be growing over the next 5 years. Well, I don't care if you think it's going to grow. It's just done nothing over the last 20, 30 years. Look at the revenue of this company. It's done nothing over the last 10 years. It's just done nothing. So, yeah. And some people got excited because they increased their prices. Well, they can only do that so much before people will leave. And have a look at the chart. This is another telltale proof that Telstra is not a high quality company. In fact, if you had to ask me and judge the ASX 20 companies, I would put Telstra near the bottom, alongside probably Woodside and Santos, maybe behind Santos. And the reason behind that is because this has not been a wealth winner for any individuals that have been on in this company for a long term. So this is a weekly chart going all the way back to 1999. I know back in Australia, back in late 1998, that sort of era, people were just wanted to buy shares in Telstra. You could have bought shares in Telstra at $9 in 1999, and your capital has been destroyed, even with dividends. This is not a high quality company. It has a moat. I understand it has a moat, but that does not mean it's a high quality company. But in saying that, I will trade this company. And I have thought just yesterday, I looked at this chart and went, interesting, but valuation matters. So this article I read the other day saying this is a buy, I just thought, because they expect a little bit of growth, I went, but it has a P ratio of 28, according to TradingView. If this company had a P ratio of 14, yeah, okay, but I just don't see any value in Telstra Group right now. But I maybe should push that aside because the chart looks interesting. Anyway, Telstra, mosquito stop. Jake Richard or Jake Chard says, can you please do an update on Frontier Digital Ventures? And then Doji Train says, Appen Gangster. It has been a gangster stock recently. Frontier Digital Ventures, they are not doing Appendix 4Cs anymore. I'm upset by that. I know the ASX says you don't have to do it anymore, but there are a few companies out there who decided to continue issuing Appendix 4Cs even when they weren't required to. And I think more companies should do that. I do like these quarterly updates from these smaller companies. So they did do a trading update. It sounded positive. I didn't see any reason to be negative about Frontier Digital Ventures on this particular update. So 30th of July, I don't remember the share price selling off. Yeah, not much at all. But for some reason, yeah, the market is just not interested in this company. I do like they're diversified. They're in the right markets. They're in, what's the term for these economies? I was going to say expanding economies. They're in emerging economies around the world. And I do expect some pretty good growth in this space. I do like the history of the management, nice quality management. So this is the sort of company I would own for the long term. And this is a company I have held for a while now. My only concern would be the chart. Just looking at this. I don't know why the share price has sold off. This could be just noise, a bit of sentiment. That's it. I would actually say if the share price falls to, say, 30 cents, say between 30 and 33 cents, that would be a really good time to take a position in this company. I would definitely not be selling my shares if it gets that level. So that was the lows in the share price back in June 2023. So about a year ago, or just over a year ago. I'm not sure why the share price is been in a bit of a funk. Not sure. They've released nothing negative, but I don't know. So it's one of those instances where I do own shares in the company, but I'm not selling at this point in time because I see some value. And Doji Train says, Gangster Appen. Still a gangster. In fact, I probably will do an update on Appen's chart tomorrow. Why not? Because when he wrote that comment, yep, it was just when it burst out. Appen Gangster. Getting towards the end of the video. Okay. Justin Ward says some nice things, and then 2 questions. In the USA, investors have resources that help to estimate earnings gap. Do we have such resources in Australia? What the heck is earnings gap? Okay. Have I answered this? It seems like I've answered this before. I either answered this or I did think about it. If I haven't answered it, if I have answered it, I'm going to answer it again. I have no idea what you mean by earnings gap. Earnings gap. You might have to help me with this one. earnings gap. Well, that's gender wage gap. Stocks, companies, or is it stocks? No, still talking about gender pay and stocks. Stock gaps. Stock gaps are caused by a number of reasons, such as earnings reports. So that's like a technical. There's a gaps in technical analysis when a share price either opens up or down from the previous closing price, and it can mean different things. In fact, they say in simple terms, traders identify gaps between opening and closing prices on a trading chart and breakaway gaps. But I'm pretty sure that's not what Justin Ward is talking about. I don't know what estimate earning gaps is. They do earnings estimates. They definitely do that, but estimate earning gaps. Do you mean the difference between earnings and the forecast earnings and the actual earnings? Is that what you mean by earning gaps? I don't know. In fact, if you do mean that, I actually have been trying to find some resources in Australia that will give me what the expected earnings are for a company for the current financial year, because I just have not seen it. Someone did try to give me some advice on that, but I have not seen any place where you can find a list of the companies with their expected earnings for the year, because that's really important when a company does announce their results. Anyway, next on to your following question. Maybe I'm being stupid. Maybe I'm a stupid person sometimes, and maybe you mean something completely different. Just trying to work out if I should hold positions over earnings releases. Yeah, so it does have something to do with that, I think, because that is tricky, because a lot of times you will see a company significantly rise or drop if their earnings results are much lower than expected. So I definitely can understand why that is a cause for some concern. All right. In the USA, they have the Roth IRA investment structures, which I know absolutely nothing about. What is a good tax-effective structure to trade in Australia? Well, I don't know anything about the Roth IRA investment structure, and this sounds like, and I'm not a tax accountant, I have no idea. This is something I think you have to see an advisor about. I could not give you any sort of advice on this, legally anyway. Good attack. I'm not even sure what you're trying to seek here when it comes to good tax-effective structures. So that's something I probably cannot answer because I'm not smart enough, and also I don't think I can give that sort of advice to you personally. And I'm going to end this video. Oh no, I'm going to talk about say something soothing. We are all. I'm pretty sure I've answered that before, or maybe I've answered a question from you before. Mate, would like to hear about Noumi from you. I'm not a fan. I have not been a fan of that company for a long time, when they used to be called Freedom Foods. And the main reason is because there was a little bit of hype about that company. And then that hyped because, and then I looked at their financials and went, I don't know why so many people are interested in this company. This company was profitable, but they were burning through cash. And cash flow for me is king. I like companies with cash flow. I don't care if they're reporting profits. They need to have cash flow. And this company was never cash flow positive. They were burning through cash, and it came to bite them in the end. Let's have a look at their ASIC proceedings. Their pennies for C. If I remember correctly, it wasn't that bad. No, it was bad. Okay, so this company has a lot of receipts, low margin. So they produce food. You go to the Woolworths and Coles, you see some of their breakfast cereals. I have actually tried one of their breakfast cereals before, but so a lot of receipts, but the product manufacturing operating costs are fairly high as well. So very low margins. So this company could be operating cash flow positive, 1 quarter, free cash flow negative the next quarter, that sort of thing. And this particular quarter, they were operating cash flow positive by $372,000, but free cash flow negative. The other thing I don't like about this company would be their debt, if I remember correctly. $459 million of debt. $459 million of debt, according to this. And let's have a look at their debt finance facilities. Convertible notes. revolving finance facilities with HSBC and NAB, finance leases with NAB. Yeah. And last thing is the chart. So the market cap of this company is probably fairly low because of the amount of debt. Market cap is 31.8 million, and the chart just looks meh. Now, in saying that, if I was just looking at the chart, knew nothing about this company, without any bias, I would be probably more interested in this company. Wouldn't be buying. The reason I'd be interested is because the share price is going sideways. Has been going sideways for a lot. So there's a lot of there's heaps of, no, that's not the right way to say it. There is no volatility. If you had to look at the Bollinger Bands, there'll be a squeeze in the Bollinger Bands. In fact, I can do that right for you right now. Bollinger Bands. You'd see a squeeze in the Bollinger Bands. Where is it? This one? You definitely have a bit of a squeeze in the Bollinger Bands. Not perfect, but that is hinting at a decrease in volatility. And usually if there's a decrease in volatility, eventually there will be explosion in volatility. It's just natural. And what I would be looking for here is a bit of an increase in the share price above sort of the top of the range, say above about 15 cents. And if it's on positive financial news, that could be exciting. Now, if you have a look at the long-term chart, this will show you that quite a few years ago, the share price was significantly higher. That's because the troubles this company had. I forget what happened, but I just remember having a look at this company way back many years ago. You can see the share price with a beautiful uptrend. And I just had a look at the company and went, why is so many people interested in this company? Actually, the financials looked horrible. And I just think people just missed that this company was, even though they were stating they were profitable, they burning through cash like there was no tomorrow. Or something like that. I forget exactly what. Anyway, so that's my thoughts on Noumi. Used to be called Freedom Foods. And they just had to change the name because Freedom Foods was despised. Maybe that's the wrong word. Anyway, that's all I got for today's video. Sorry, Alec. Oh, well, the next question I'll be talking about, I'm sure I've answered this before. Yeah, I've definitely answered that from Liam Jones, SPP and Zip. Okay, I'll talk about a question asked from A Song, talking about how do I keep track of share transactions, dividends, and CGT. That's actually fairly easy. And because it's fairly easy, it's a really good way to start off my next video. Okay, so that's all I've got for today's video. Hope you've had a good weekend. If you have any questions, or having a good weekend, depending on when you're listening or watching this, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.